Outlook session with our head equities and co-CIO, Mr. Harish Krishnan. We'll give a couple of minutes for people to join in before we start. Thank you for your patience. Okay, we have nearly 450 participants. I think we should start now. The flow of the event would be this way. So I'll hand over to Medha, who is our head of products, who will introduce the rest of the evening. We will have a session where Harish will give us his observations. And then we'll have a brief Q&A. Please post your questions in the Q&A chat, in the Q&A box. There is no point in raising hands because we will not be able to unmute participants. All questions will be answered through the Q&A chat box, please. Over to you, Medha.
Yeah, thank you so much, Kamaini, and a warm welcome to our panelists, Harish, Kamaini, and as well as all the participants on this call today. Thank you very much for logging in. As you know, the topic goes, and we've had quite an eventful first half where the budget was announced, and we have with us Mr. Harish Krishnan, who will help us, sort of decode the budget, sharing, some highlights and as well as the first level analysis that we see, although our team is working at a deeper level to understand the fine print and to sort of put together the a little more deeper analysis. But today Harish is here with us, and I'm sure he'll do his best to bring a complete decode to this budget. So without further ado, over to Harish, and then of course we'll take the questions that you have after he is done with his presentation.
Good evening, everyone. Thank you, Kamaini, and thank you, Medha, for the introduction as well as the topic for today, which is a union budget, which got presented about a couple of hours back. So it's really hot off the press. Even as I give our views as we see it now, let me add two caveats right up front. This budget, as you may have heard, has got a lot of proposals of tax changes. We are not tax experts. We are investment professionals. And therefore, obviously, while we will give some perspective on some of these tax implications from a market point of view, I think it is only appropriate that we caution that, you consult your tax advisor to get the finer print of the various changes that have happened. That's point number one. The second caveat that I think it's only prudent for us to say is that, the team, as Medha pointed out, is still going through the fine print. There might be some more changes that may get announced. So we will come up with a full-fledged analysis and deck tomorrow, wherein we will be coming on with that. So this is more a first cut kind of a read-through and more from a market perspective rather than, from a personal tax perspective. perspective. So those were the two small caveats that I thought I'll start out with, and then let's move on to our understanding and our perspective. Key budget which got presented about 2-3 hours back, broad implications kya hai? So the broad build up to the budget.
I'm sorry to interrupt you, Harish, but there's a request to have English instead of only English. So please do try and mix. सुनील जी, हम पूरी कोशिश करेंगे. अभी तक बेसिकली हरीश ने यही कहा है कि हम पूरी तरीके से कोशिश करेंगे बजट को डिकोड करने के लिए, मगर इस बजट में टैक्स रिलेटेड बहुत सारी चेंजेस प्रपोज्ड हैं. हम इन्वेस्टमेंट एक्सपर्ट्स हैं, हम कैपिटल मार्केट एक्सपर्ट्स हैं, मगर हम टैक्स एक्सपर्ट शायद पूरी तरीके से ना हो. तो और डिटेल्स आपको कुछ हम कल भी करेंगे, कल या परसों भी करेंगे एक कॉल जिसमें शायद और डिटेल्स आपको हम दे पाए. और उसके अलावा हम ये भी आपको रिक्वेस्ट करते हैं कि आप अपने टैक्स कंसल्टेंट से जरूर सलाह करें ये पता करने के लिए एग्जैक्ट टैक्स रिलेटेड इम्प्लीकेशंस को. सो हरीश, आप over to you now. Try and give a combination of Hindi and English, please.
Dhanyawad, Kamaini. That was my Hindi. Anyway, obviously एक interim budget हुआ था February of 2024 में. That was a vote on account budget. और वहां से जुलाई तक if we were to look at the context कि ये बजट से क्या expectations थी और क्या changes हुए थे from February of 24 till July of 24 to kind of change some of the broader contours of budget 2024. Broadly चार चीजें थी. एक था कि सरप्राइजिंगली लार्ज डिविडेंड आया था आरबीआई से, 1 लाख करोड़ से ज्यादा का पैसा आया था टू द गवर्नमेंट, which the real question was कि ये जो पैसा आया है उसका खर्चा कैसे कर पाएंगे, which is one aspect of what we were looking for when Madam Nirmala gave her budget. So that is one thing. दूसरा था कि कंपेयर टू एक्सपेक्टेशन जो फरवरी और मार्च में थे, द एक्चुअल वर्डिक्ट ऑफ इलेक्शंस जो हुए थे, चुनाव के नतीजे थोड़े डिफरेंट थे कंपेयर टू द ब्रॉडर एक्सपेक्टेशन दैट वर देयर. एंड गिवन दिस फीडबैक, will the government change track is the second key point that one was looking for in this budget. तीसरा था obviously to make the sarkar, they had obviously gotten two key coalition partners, one from Bihar and one from Andhra Pradesh, and uske pulls and pressures se kuch change hota hai ki nahi. That was the third broad aspect. And chautha tha ki over the course of the next 12 months some very large key states चुनाव के लिए जा रहे हैं, and therefore will there be any message from this budget over to those budgets? So there were a lot of political overtones that were there. There were of course the economic overtones which are more important from a market point of view, but it had basically an expectation from both of these aspects. So broadly अगर देखा जाए तो if one were to look at it purely from what has come out, I think by and large सरकार जो last 10 साल से कर रही थी, which is in terms of being prudent, which is कि they are not spending more than that what they earn, जिसका एक है fiscal deficit, they have continued to maintain their glide path. In fact, the numbers that came out, which we will discuss, is even lower than what they presented in February of 2024. So basically जो RBI का जो बड़ा dividend आया था, उसका बहुत सारा फायदा हुआ है in terms of further reducing the fiscal deficit. So they have continued to further improve their balance sheet position rather than spend in various projects or in various subsidies. So that is one. दूसरा जो numbers है broadly credible है in terms of both the expectations of economic growth, which is there in both in terms of real terms as well as nominal terms. Tax के जो numbers expectation है वो भी reasonably credible है. तो by and large we don't think that getting the broader numbers barring any unforeseen calamity like COVID or some war, by and large we think that FY25 का जो numbers projection किया है will be met. The one of the key expectation was because of the Chunav and the impending elections that were there, especially in some very large states like Maharashtra, eventually even Uttar Pradesh going to polls, Haryana going to polls. We didn't see any big populist announcement. एक expectation था कि budget में they may come up with some amount of populist measures, at least for them. I don't think that this was really the budget where there was a lot of announcements. जो infrastructure का push था, especially since COVID, जहाँ पे सरकार continue to keep spending on capex, and more importantly जो capex था वो more in terms of higher quality spending, दोनों बरकरार रहे. So therefore it continues to have its own focus on both capex and the quality of expenditure. Okay. In terms of the fixed income markets, there has been some improvement, if I may, कि सरकार का जो बोरोइंग है, एक तो है ब्रॉड नंबर्स सिमिलर है, एक्चुअली थोड़े कम हुए हैं, एंड विद इन दैट आल्सो दे हैव सेड दैट इन द फर्स्ट हाफ दे विल broadly cut down on T-bills and they will focus on more dated securities, and therefore अगर yields बहुत ऊपर चले जाते हैं for whatever reason, depending on what US Fed etc does, they have the flexibility in the second half to again come back on T-bills. So therefore, this is broadly a very good budget even for the bond markets, जहाँ पे overall fiscal deficit continues to be remaining in check. Overall inflationary budget नहीं है in terms of giving too much of money to various people so that their spending results in potential inflation coming through, वो भी नहीं आ रहा है. So therefore this continues, to remain a very good budget for the bond markets, and therefore obviously it is a function of also the US markets in terms of the bond markets वहाँ के, but by and large from an Indian perspective I think this is a very good budget for the bond markets. More importantly, the longer term glide path again continue to remain very encouraging. So broadly अगर देखा जाए तो this is a budget जहाँ पे you can say bond markets के लिए continued momentum, no issues. From the equity markets, I think there were some pockets of infra and investment that they continue to maintain. थोड़ा बहुत spending किया है, and which we'll come to in some bit, but more or less this was not a very populist budget जहाँ पे बहुत सारे नए स्कीम आए which can change the growth vector in a meaningful way, in a positive manner. So this is broadly what our sense of the budget was, and if we were to think of the bigger headlines, this is the broad trend from a fiscal deficit point of view. In the interim budget जो फरवरी में बताया गया था, ये 5.1% था. Today when madam announced, it was at 4.9, तो 20 basis points से कम हुआ है, and that's broadly coming in because of the RBI dividend, which has come through in terms of reducing this number by 20 basis points. Like we discussed, the more encouraging thing is the glide path to come to 4.5, and उसके बाद भी they made some comments on getting the overall debt of the central government down to the 60%. I think while obviously all of this is in the anticipation of a rating upgrade, possibly it may not happen soon, but they continue to keep playing into that conservative fiscal prudent path, from a overall government balance sheet point of view. ये हुआ fiscal deficit. दूसरा था कि from the deficit number, and this is the earlier one was on percentage of GDP, ये था actual deficit, करीबन 17 lakh crores का number था जो फरवरी में अनाउंस किया था. From there it has come down by about to close to about 16,200. So roughly you can say there has been about a 70,000 crores reduction in terms of that. By and large, if you were to think about it, कहाँ पे ज्यादा स्पेंडिंग हुआ है और कहाँ पे ज्यादा कम हुआ है, obviously कम हुआ है in terms of the RBI dividend. There has also been some reduction because of the income tax. There have been some slabs which have got reduced. So roughly about 30,000 crores of extra, money going to the consumer. Some amount of interest gains because the debt numbers have come down. And they have increased the number of loans that have gone to states, which is more linked to capex. So therefore, they have budgeted some amount of that. So broadly, अगर देखा जाए तो the big delta from February budget till now का जो number है, एक था RBI का dividend. Some of that has gone in terms of the slab reduction for income tax. Roughly about 30,000 crores is our assessment at this point of time. Some from interest savings that were coming through, but a lot of that has again gone back into some form of capex spending. It hasn't gone into very much large number of consumer spending. So that's I think encouraging, because obviously capex spending is more productive than consumer spending. In terms of the overall spending by the center, broadly we have seen an increase in terms of overall spending compared to what it was in 22 and 23, which were periods of significant consolidation, because obviously सरकार ने बहुत खर्चा किया था during COVID, and therefore they had to consolidate. We have actually started seeing a reversal out here. So while they are they are talking about growing at 8.5% compared to the nominal GDP growth, which is at 10.5%. The spending by the government is still going to be lower than what it is. So, which is why you are seeing that fiscal consolidation की deficit का number नीचे क्यों आ रहा है? Because the overall expenditure जो है वो overall GDP से कम grow हो रहा है. But the big delta that we have seen is spending on rural. And I think, broadly, given the elections and the outcome that has come through it, there was an anticipation that there is going to be some amount of spending. They haven't gone completely all out, but compared to the last 3 years, जहाँ पे there was a very, very sharp contraction or consolidation phase. I think in 24-25, we've seen a reasonably strong growth coming back into the rural economy. Now, this is broadly, I think, one of my theories as to हम क्यों इतना K-shaped recovery experience कर रहे हैं. And obviously, this is more from data point of view. But broadly, अगर देखा जाए कि कोविड के पहले और आज के जो numbers है, and if you were to look at ये जो numbers है basis interim budget है, और ये जो numbers है basis आज के जो budget है. Broadly, if you were to think of it, Sarkar's, the government's total contribution to the economy has gone up. And that has gone up because, they've been spending a lot more than what they have been earning. And therefore, the fiscal deficit has gone up. So, अगर FY20 से आज के दिन तक देखूं, तो till FY25, roughly about 6.8 lakh crore से overall government spending has kind of gone up. But this fiscal deficit can be broken down into two parts. एक है what is called the primary deficit. Primary deficit is basically all the extra spending that the government does, which they have not been able to get from revenues, be it tax or non-tax, but without including interest cost. Because interest cost क्या है कि वो आपके पुराने debt के लिए भी वो continue to keep contractually honor करना होता है. So therefore, the primary deficit is basically what the government is trying to move immediately in terms of, say, consumer spending, subsidy ho, rural ho, etc. So if you were to think about it, while the overall government balance sheet and the overall government salience in the economy has gone up, and it has gone up to this extent, bulk of that increase is actually interest outgo, roughly about 5.5 lakh crores. And what has gone to the consumer or the citizen is only about 1.3 lakh crores, compared to what it was the trend pre-COVID. Effectively, interest outgo as a percentage of GDP has gone up by 50 basis points compared to what it was in 2018, 19, 20. Currently, it is at 3.6% of GDP. Now, why am I mentioning this? Is that this 50 basis point is basically coming to all the savers. Because obviously interest जो सरकार देता है किसी और का इनकम हो जाता है. And in India, given the fact that all the debt in India, as far as the government is concerned, is owned by Indians. There is no overseas ownership by and large for this debt. A lot of it is owned by Indians, by domestic Indians, by domestic citizens, and therefore this extra spending by the government in terms of interest is actually the extra revenues for various kind of people, right? Or various kinds of citizens. Now, in any economy, the top 5-10% of the citizens are the capital owners, and the rest are the consumers of various forms, right? So what has happened is the capital owners, which includes most of us in this call, including all of us, right, have actually got quote unquote a subsidy of 50 basis points from the government because of all of these changes. And this increased subsidy in some sense is what is there in various forms of capital market. So agar aap dekhoge ki be it in terms of FNO, be it in terms of mutual funds, be it in terms of cash equities, be it in terms of real estate, be it in terms of foreign travel, be it in terms of say spending on luxury and on autos, etc. These are all done by the top 10% of households, and they have all been reasonably well, they've got compensated by this extra subsidy which have gone to this top 5-10% of households, and which is why we are seeing this K-shaped recovery, right? And therefore, the reason why we're spending some time here is compared to the interim budget to the full budget. Again, if you were to look at it, the primary deficit has actually reduced far more than what the interest outgo has reduced by. So therefore, we have not seen a big delta change in terms of what the consumers are seeing. It still is favoring more investment led compared to the consumption led. So that is one key aspect, be it in terms of our overall investment climate, in terms of say our personal savings where we are investing in. As far as the last 4-5 years are concerned, it continues to stimulate investment over consumption, and this budget, I think, by and large, continues to maintain that trend. Of course, given the fact that they had given the subsidy in some form or other, quote unquote, it did result into a huge amount of changes, and that changes came in the form of capital gain subsidy. Now, by and large, while हम सबको पता है कि 2018 में long term capital gains आया था from 0% to 10%, effectively. Before 2004, also there was reasonable amount of long-term capital gains. From the period from 2004 to 2018, roughly 14 saal, is where there were no long-term capital gains, right? From there, we have now moved to 10% going to 12.5% as far as long-term capital gains is concerned. That's the broad thing. Whereas short-term capital gains have clearly moved up to 20%. So this has been the while overall macro or whatever were the key announcements that continue to be along expected lines and by and large conducive to both the investment climate, equity markets, and bond markets. The real elephant in the room that came through was the last 5-10 minutes of the speech, wherein Madam made some reference to the changes in capital gains, and that clearly has meant, obviously, there is a greater amount of taxes that one has to pay to be participating in various capital asset classes, and we'll kind of go through that. But by and large, this is a very good study by Axis Capital, Neelkanth Mishra, one of the top economists of India, jahan pe broadly, all of this, what they are trying to say is that, this is not meant, or ये जो revision किया है, it is not meant so much so to increase the taxes from the government point of view, but it is meant more from a fact that the overall different asset classes में बहुत सारे distortions थे, and they wanted to harmonize that. So while this increase of 10 going to 12.5, etc., may result in say 0.1% of GDP, if at all, coming through for the government. I think the bigger approach that they have chosen to take is that, for real estate, for gold, for listed, for unlisted, let us try and harmonize it. And so that has been their attempt, rather than trying to gain more revenues. Of course, they had also announced on FNO an increase in STT. That was more to also reduce some amount of speculation that has gone up, and both सारे policy makers over the course of the last few months and the last few days, from the RBI governor to the SEBI chairperson to the economic survey, the chief economic advisor, बहुत सारे policy makers ने reference किया है कि बहुत ज़्यादा FNO में household savings जा रहे हैं. So to some effect, the government has done it. Maybe there will be more measures from the regulator, from the exchanges, etc. When it comes to FNO, we don't know, but possibly there could be more from that perspective. ओवरऑल अगर हम देखेंगे टैक्सेस के, बिफोर कोविड पर्सनल इनकम टैक्स हर साल रफली 0.2% ऑफ जीडीपी से बढ़ रहा था. Post COVID, it has definitely moved up by say 0.4, 0.5%. There has been a greater buoyancy. Part of it is because of that K-shaped recovery जो मैंने पहले बताया था. Obviously, the capital owners are getting taxed a lot more. They've also got the benefit, and that is what is kind of lifting overall income tax rates. From a corporate tax, obviously, from 2016-17 onwards, wherein there was a cut in corporate taxes, we are now starting to move up as the overall profit pools of corporate India in totality are starting to go up. So that is as far as the broader trends in both income tax and personal and corporate tax is concerned. Now comes to the big change. Obviously, like I said, कि हम tax expert नहीं है, and obviously we strongly suggest that you consult tax experts. But this is our understanding of the big changes that have happened. So broadly, there have been three big changes. One is in terms of what qualifies as long-term holding. Okay, so if you look at say listed bond debentures, unlisted bond debentures, जो especially direct डालते हैं bonds और debentures में, और debt oriented mutual funds, वहां पे there has been a revision in terms of what qualifies as long-term holding. So from 6 months, it has come down to 24 months. So that has been one key change that they have tried to bring, which is to get all asset classes that 24 months is the time frame, uske beyond which if you hold an asset in various stages, then it gets qualified as long term. The only exception is that of listed equities, which continues to remain a 12-month period. So that is the only exception for now. By and large, everything else, the period is moved to 2 years. Okay. The second thing is in terms of the tax rates, जहाँ पे marginal tax rate था, especially in certain cases, it has moved to 20%. In certain cases, it continues to remain where it is. In certain cases, like say equities, it has gone up to 20%, which is what we said that short-term capital gains has moved to 20%, right? The third thing is in terms of long-term capital gains across the board, it has moved up closer to 12.5%. In some sense, they could have taken it closer to 20%, where bulk of the other asset classes were. In some sense, they have chosen to take it to 12.5%. But the big delta is that especially in property and gold, जहाँ पे the earlier regime had significant benefit of indexation benefits, वो अभी निकल चुके हैं. So therefore, there is no indexation benefit even as the overall rates have come down, because there has been no indexation benefits, especially for properties which are of very large value, which have gone up significantly. I think the implications can be quite dramatic. But like I said, हम tax expert नहीं है. Please check with your tax advisors, and over the course of the next few days, we'll also kind of clarify certain things as far as this is concerned. But by and large, this budget, the big shock element, so to speak, was the fact that capital gains got revised upwards from equity point of view. For many other asset classes, it came down. But the second big surprise was that indexation benefit that investors were enjoying in various other asset classes are now completely gone off across various asset classes. So that's the big change that has happened. Again, from an equity market perspective, obviously 10 going to 12.5, increases the hurdle rate of expectation, because उतना ज्यादा आपका tax होगा तो effectively net rate जो आप which investors eventually earn will get reduced, and therefore you would ideally want a higher return from markets to compensate for that. So in some sense the requirement has gone up, and so therefore there is a likely some amount of consolidation that one can expect. But broadly, this was the big shock element that came through as far as this budget is concerned. From a sectoral perspective, as far as investment is concerned, broadly जो interim budget के numbers थे वही है. On top of that, like I said, state government को there has been under 1.5 lakh crores of interest-free loans. So there has been some more boost for investment, but by and large they have maintained it. It's been broadly positive for infrastructure, metals, industrials, etc. As far as housing is concerned, this was supposed to be a big thrust area. The government has added some more outlay in terms of Pradhan Mantri Awas Yojana, both rural and urban. So there has been an increase compared to what was announced in the earlier budget, and therefore we think it is positive for cement, building materials, and pipes. Overall, the big change has come from in terms of gold, jahan pe, the customs duty has been reduced. Obviously, for the organized jewelry companies, it's a very big positive. जो unorganized है या छोटे-छोटे jewelers है, उनके लिए actually it is a negative, because overall their gold prices will suddenly fall and therefore inventory losses होंगे. But very well managed jewelry companies which typically hedge their jewelry, this is, I think, a great boost which has come to them. It will make them even more competitive. And like I said, overall rural side के लिए थोड़ा ज़्यादा spending हुआ है compared to what it is. So at the margin, it is positive for consumer staples. So this is broadly where it is now. Obviously budget ho gaya hai in terms of the event that was there. Obviously markets are finally slave of earnings. So eventually it will come back to earnings as a key driver. In that context, we just thought that it was also important to see how so far, obviously we are still halfway. बहुत सारे companies अभी तक earnings declare नहीं किए हैं, but by and large अगर आप देखोगे तो we have seen more downgrades than upgrades when we look at say FY25 or FY26. More importantly, अगर आप देखोगे तो the downgrades are more in the broader markets. So BSE 100, which is large cap, if you see actually in 26 more upgrades than downgrades. But as we come to say 500, we are actually seeing more downgrades than upgrades. So clearly small micro caps, etc., we are starting to see more downgrades than upgrades that are coming through. And therefore, we do think that, eventually, like I said, these events will come and go. By and large, what matters is the overall earnings. We have this very nice data point which we'll again share when we release the deck, which is in terms of by and large budget ka agar aap dekhoge, so while there is some activity in the next 1 week, etc., post the budget, but generally 3 mahine mein it's broadly markets are flat compared to whenever the budget is announced. So I think the impact of budget is very minimal. Eventually, markets work on fundamentals and on other developments. For now, we do think that earnings, especially for the small cap and lower and micro cap, we are seeing some amount of pressure. It's not to say that large caps also are going through fine, but on a relative sense, we are seeing more pressure in small and micro caps. Broadly, if I were to summarize our view, we continue to remain positive on Indian economy. More importantly, हमारा जो corporates है, उनका balance sheet is extremely good. Just to give you a sense, COVID के पहले करीबन 6 लाख करोड़ का profit था और 6 लाख करोड़ का capex था. आज के दिन में 14 लाख करोड़ का प्रॉफिट है. सो ऑलमोस्ट 2.5x हुआ है 3.5 years में. That's been the extent of the growth. Debt has come down, right? Capex has moved from 6 lakh crores to 9 lakh crores. So आज के दिन में there is a problem of plenty. The fact that companies are giving more and more of cash flows over a cycle, it will get reinvested into new capex, and that new capex will give result into more profit and cash flows coming through. So while we think that earnings have doubled in aggregate over the last 3.5 years, हमें लगता है कि अगला doubling of earnings is going to be more gradual. Typically 6-7 साल में होता है, and we think we are more likely to be in that ballpark wherein earnings is likely to double. This is our best guess at this point of time, wherein it can double over the course of the next 6 to 7 years. अगर हम देखेंगे फ्रॉम प्री कोविड टिल आज, ओके, मार्केट कैप बहुत कंपनीज के बड़े हैं, और अगर हम देखें कि लार्ज कैप, मिड कैप, small cap or micro cap, okay, kitna increase in market cap is because of earnings increase and how much is because of valuation increase, right? In large caps, broadly जो market cap बड़ा है वो earnings के increase से कम बढ़ा है, which is basically earnings have been much more than even market cap increase as far as large cap is concerned. Mid cap में roughly about 67% of the market cap increase is because of earnings and 33% is broadly because of valuation re-rating. Small cap में वो 50-50 है, which is roughly 50% of the market cap increase is because of earnings and 50% is because of valuation. And micro caps में almost 30% or 33% is only because of earnings. 67% is because of valuation. So we do think that large and mid cap have a far better risk reward profile at this point of time. Clearly, asset allocation is the mantra. With markets at reasonably fair value plus levels from a valuation point of view, even in large cap. We think and the fact that fixed income में भी हमें लगता है कि ये बजट अच्छा था. We can continue to gain returns. Commodities also continue to remain reasonably good from a risk return perspective. So asset allocation products we think is possibly a better approach at this point of time. Broadly, what we are saying is that if you were in small caps, basically we are saying to reduce the risk from portfolios, which doesn't mean that you completely abandon risk. Basically अगर आप small cap में हैं तो आप mid cap में आ जाइएगा, mid cap में हो तो large and mid cap में आ जाइएगा, large and mid cap में तो flexi cap, etc. So this is not the point we think wherein taking more risk will get you higher returns. It is better to be slightly more I would say cautious, but slightly more toning down expectations rather than expecting that we can keep doubling every 3-4 years just because the last 3-4 years have been so good. From our key products perspective, we think that our large and flexi cap products they are ideally suited. Both the ABSL flexi cap and frontline funds, they have been almost 25 years of track record, have done reasonably well in most market scenarios, and I've been in Q1 and Q2 more often than not. We have a new fund which we had launched called the ABSL Quant Fund. We call it the T20 Specialist. Basically, this tries and finds which are the themes which are likely to work and which are currently in favor, and tends to have a very high exposure to such kind of themes. So instead of looking at multiple thematic funds कि यहाँ पे भी डालना वहाँ पे भी डालना है, this is one fund wherein this is going to be playing the flavor of the season, and it reasonably churns quite fast. So every 3-4 months a new portfolio comes through, and therefore it kind of rebalances quite quickly. It doesn't mean that every match it will win, but by and large it's got a reasonably good hit rate of winning more matches than losing more matches, and over a long period of time we think it can create a significant amount of value for our unit holders. We also suggest two funds which are not currently in favor. एक है अपना Gen Next fund और दूसरा है digital fund. Both of these themes haven't done as well over the course of the last 1-2 years. Okay, they unlike many other themes which have caught the fancy, overall ownership levels across the mutual fund industry are also lower in both of these funds, and therefore we think that from a 3-year kind of a perspective and beyond, allocation into these categories and these funds of ours in a 50-50 manner can help in creating allocation into today a sector or a theme which is currently not in favor. But we do think that over the course of the next 1 to 3 years, these can potentially give you slightly higher returns than that of the market. And lastly, our asset allocation products, be it that of BAF, MAF, or equity hybrid. So these are broadly what we think appeal or would make sense to most investors. Obviously, every investor is different. Unka risk appetite is different, and therefore obviously it's best to consult a financial advisor to take that call. But broadly from our slate, we think that this is what at this point of time we would be more confident in terms of suggesting to a broad average investor audience. I'll kind of stop here. Obviously both are in numbers where from a budget point of view, but happy to take on any questions that any of you may have. Thank you.
Yeah, thank you very much, Harish, for taking us through the key announcements of the budget. And we do have quite a few questions in our Q&A box, so I'll start with that. First of all, I see quite a few questions posted on trying to understand the impact on debt mutual funds in terms of taxation. Do things remain the same as they were, or is there any change?
As far as our best guess goes, there is no change as far as the debt mutual funds are concerned. They continue to remain as they were. So yeah, everything remains the same from that point of view. We continue to believe that debt mutual funds are a great place at this point of time, especially post the budget. We do think that fixed income can potentially also give good risk adjusted returns. And so while our fixed income team will also have a call to explain this in greater depth, by and large, this budget is net positive for fixed income.
Sure. So debt mutual funds were taxed at the income tax slab rate for any individual. Short term, long term did not matter for debt mutual fund. That continues to be as it is. The same is the tax treatment generally for FDs, because that's also one of the points. There's also a question that, and maybe you would like to, for debt mutual funds which were invested before 31st March 23, before that announcement came in, which had indexation benefit. With the indexation benefit now being removed, will that be there or that will also be gone?
I think it's best you only answer it. I mean, I really wouldn't know the legalese of this, but I think it's best that, like I said, it's best that we wait for a few more days before we make a concrete announcement on this regard.
Exactly. So usually things are prospective in nature, or they start applying from the current date, like is in the
That's
case of
exactly what I was also going to say, Medha, that most of the time these rules are prospective in nature. They are not retrospective. मतलब पुरानी चीज पे ज्यादातर अप्लाई नहीं होगा, ये आगे जाके ही अप्लाई होगा, मगर ये like हरीश said, एक दो दिन रुक जाते हैं थोड़ी और क्लैरिटी इस पे आने के लिए. सो मेधा, आप जो नेक्स्ट वाला कॉल करेंगे उसमें शायद इन चीजों पे थोड़ी ज्यादा क्लैरिटी आपको लानी चाहिए.
Definitely. And on the topic of capital gains and tax, Harish, maybe you want to once talk about even equity mutual funds. तो ये जो 2 साल का जो holding period, long term capital gains का जो change हुआ है, वो equity mutual funds के लिए किस तरह से impact करेगा? Mutual fund holdings in equity.
So ideally, we think that the horizon for equities has to be much longer. Okay, near-term returns, are harder to predict. Longer the investment horizon, the better the chances of beating inflation. So I think, by and large, most retail investors are coming in with longer-term horizon, and therefore, we would think that this change of time frame shouldn't really matter, to qualify for long-term capital gains. So by and large, we think that it fits into the horizon of most investors.
Sure. There's one question, Harish, on trying to understand the impact on the manufacturing sector or the theme of the budget, the announcements that have come in today.
So by and large, I think, it was more a continuation of the earlier announcements. The only difference was there was some specific mention in terms of, say, employment linked incentive, especially for the manufacturing sector, jahan pe, for PF, etc., I think for the next 2 years or 3 years, the minister said that, the government will also pay some amount of the EPF contribution that were to come through for manufacturing sector. Even for other sectors, for new employment, there are some SOPs. So, especially at the lower end, where typically, most manufacturing sectors also do employ that. I think there is some relaxation in terms of their overall cost. There is also a provision for the top 500 companies, and this is beyond manufacturing, that they can use the CSR for skilling as far as employees is concerned, in terms of internship, etc. And therefore, that's a very large amount for the top 500 companies, 2% of PBT. That can be channelized in terms of skilling as well as for all of these programs as well, which is again a welcome development from an overall skilling perspective. But given the fact that manufacturing में सबसे बड़ा skill gap का generally एहसास हुआ है from a manufacturing point of view, I think they will tend to benefit a lot more from that perspective. There have been some reductions in the custom duties in certain areas, for certain things like, say, electronics, actually, mobile phones ke liye, it is actually kind of reduced, which is in some sense negative for electronic manufacturing. They were given this kind of a leeway over the course of the last 4-5 years, ताकि India as a manufacturing hub ban paye from a mobile phone ecosystem. Clearly, we have now started to emerge as a large, formidable player, and therefore they have kind of withdrawn those kind of incentive that they had provided over the course of the last 3-4 years. That has kind of gone off. In certain cases, like say PVC, etc., there have been some increase in import duty, so to help the local manufacturing. But every year maybe 5-7 such products में tinkering होता है. I mean, obviously, certain companies benefit, certain companies lose out. But is there a overarching theme or an overarching kind of an impact on the overall manufacturing space? Not really. So we continue to remain positive on the broader construct of manufacturing. Of course, last 1-2 साल पे returns काफी अच्छे हैं for the team per se, and therefore it is only natural to expect some cool off. But we think that over the course of the next 3-5 years, we continue to remain positive on manufacturing as a theme within our portfolios.
Sure. So we have one participant who has posted 5 questions. I will first, take the other question, then come to the tax questions.
Yes.
Maybe, yeah. So the first question is, now should we expect a time value correction for a while? And another question related to budget is, why wasn't there any discussion on Manrega in the budget?
It's a pertinent point. So I think, at least, I mean, I shouldn't be answering for the government, but this is our understanding as to where the government's priorities have moved, was that there was clear focus on employment and skilling. That was the broader tone. And in some sense, Manrega is still very much low end, basically unskilled, low end casual work, kind of, getting paid a minimum wage, right? So therefore, they had wanted to move that into all kinds of employability in terms of skilled workforce. And that is where we have seen a bigger shift happening. So I think there has been an acknowledgement that, employment is an issue. labor participation has to go up. There were encouraging remarks even for improving women's participation in the labor workforce. That also is something which is very, very important in if we are to develop. I mean, in the journey of development as an economy, the female labor participation is a very, very important thing, and it's very, very low in India at this point of time. So I think they have gone into tackling that rather than wanting to give more money on that front. On rural spending, clearly there has been greater spending in terms of areas like say PMAY rural, which is the Awas Yojana, irrigation. There has been greater spend, etc. on the rural side. So they have continued to keep their focus on capex linked to rural areas without necessarily giving quote unquote subsidies or handouts to the various citizens. So that is the broader construct, but a great question and great observation.
I will just add on to that, Harish, and you can, I think, so if we are to currently, India is in a very sweet spot because of the demographic dividend that we are expected to exploit in terms of, maximum workforce, IT skilled workforce, the technologically savvy workforce being there versus a lot of the other countries. However, if we have to actually take full advantage of this workforce, the skilling is extremely important. Because if we have people in the right age bracket, but we don't have the right skill, or we don't have enough women participation in the workforce, both of which, like Harish clearly mentioned, are critical for us to take advantage of that demographic dividend, which will not last forever. I think the government has taken a very good stance in terms of increasing skilling rather than just putting hands in the money of people in the form of subsidies. I think that's the whole direction that the government is taking.
Sure. Thanks, Kamaini. And on the other question, Harish, that was there here on expecting a time value correction. And I'm sure that I'm bringing that again because you also mentioned about earnings, right? And more downgrades that you're seeing than upgrades. So how do you see, and people are wanting some direction on that can we expect some correction?
So I think from a fundamental perspective, clearly we do think that that we are in for some consolidation. Earnings, sales growth, because last year earnings have primarily come from margin expansion. Eventually, top line growth has to come back stronger, right? And we are currently in a situation where we are not seeing too many such companies which are reporting a 15-20% top line growth, right? And therefore, I think it's still going to take some time. See, broadly, our assessment is that, like I said, overall profits moved from 6 lakh crores to 14 lakh crores for listed companies. Their capex has moved from 6 lakh crores to 9 lakh crores. आज जो कंपनी या 2 साल पहले का जो कंपनी ने capex किया है, that comes into fruition in say under year, under 2 years, and that is when the next wave of cash flows and the next wave of profits will come through. So I think we are in that phase where of build out of capex in many companies. Over the course of the next 1-2 years, we do think that top line numbers will start moving up, and that is where we will see a greater longer runway of growth. So unlike a typical cycle jump, the runway falls off very fast, I think here we are going to be there for some time before we start an acceleration. So therefore, I think that we should go in for a reasonable amount of consolidation, at least for the next 3-6 months. There should be a consolidation in the market. But having said that, we've been having this view, even a month before or 2 months before, and markets will do their thing. So I guess we'll have to navigate it basis that. But broadly, our base case is that we should see a reasonable amount of time value consolidation.
Sure. Thanks for that, Harish. There's another question from the same gentleman or lady that do you think removal of indexation from real estate will create more cash in the economy?
I think this is a hot topic even within our office. I mean, this has been the most talked about thing as to ये पैसा आएगा, कितना आएगा, या whether it will continue to remain within the real estate economy. And there are pros and cons of both, let me put it. Obviously you can offset the increased taxes if you're going to reinvest that into real estate, right? And therefore does it create an incentive कि आपका जो भी gains है, because आपको tax कम pay करने हैं, for some investors, does it actually mean a greater focus that they go back into real estate rather than taking money away from real estate? So that is one view. The second view is that, most of, over a period of time, there were a certain set of buyers, especially, I would say, older people. Again, this is anecdotal, so don't hold me to it, but broadly, I get a sense that, the older generation, typically had used real estate as an inflation protected asset class. And therefore, there would be many people who would have, say, 4 houses, 5 houses. They would keep adding, and every 3-4 years they would sell one house and they'll again buy into another property, give it on rent, etc. I think over a period of time, managing these properties is becoming more and more of a challenge, especially with a low rental yield, etc. Add to that this complication, possibly they may say that it is not worth it. This added this added cost of no indexation. Basically, the view is that these are no longer inflation protected. From a government policy, I mean, the asset class might still be inflation adjusted over a long period of time. All of these asset classes typically tend to be inflation adjusted, but I'm saying from a government support point of view, that is no longer there. So therefore, there is a view that, incrementally people will say that it is not worth getting back into that real estate. So only the genuine buyers, the first time buyers, etc., will go into the real estate market. The people who already have 3 and 4 houses may not necessarily go back and create the 5th and the 6th house. And so that demand may eventually move out from real estate and move into other asset classes, including financial assets. So we are clearly broadly seeing a financialization of savings. We had released a very big report on that theme at the start of this year, wherein we said that, of the total wealth of Indian households, if I'm not wrong, still about 60% of their wealth is in real estate. It's only about, I think, 5 or 7%. Again, I may be off the numbers, but we can share the link of that report, which was into asset classes like equity. And we do think that, that shift will happen more and more into these pockets. Maybe this kind of a non-indexation benefit going away accelerates this trend. So, like I said, we are caught in both these camps. There are reasonable arguments in both of them. My own hunch is the financialization of savings will continue to accelerate rather than trying to stop it. That's my personal view.
Sure. One question, I mean, I see being posted like on understanding the indexation, etc., is about taxation on FOFs, be it gold funds, be it FOFs. I think my sense is that before the budget also, their tax treatment was akin to non-equity mutual funds, which is like the debt funds. And there should be no change to that. That is the current interpretation and my opinion on that. So that stands for FOFs and gold FOFs, etc.
The only thing, again, you are the better expert. I mean, I'm just saying that they have created this provision that from 26, a lot of these FOFs, etc., may not be classified as debt mutual funds. So this is again from 26, 27 onwards. Again, it is too early for us to really get the fine print and get the understanding. But I'm just saying that, broadly what you are saying will continue to hold. But from 26, 27, maybe some of these categories will have a slightly different treatment than debt mutual fund. Again, you are the better expert than me.
So friends, on the tax treatment, like, Harish started off with, we'll also, bring out our interpretation in consultation with our tax advisors, and we'll bring out a tax reckoner for the benefit of all our investors. So just holding on to that till that time. We'll move to the next question. Angel fund tax abolition with benefit category 1, basically. Could you please elaborate on it? That's the question. Abolition of angel
Yeah, I
angel
have
fund
very,
tax?
I have never been an angel investor, but the limited interaction that I do know of is, I think in 2020, 2021, my understanding again, is when it got introduced, when there was a lot of money chasing, startups, etc. Today, I think startups, etc., are also trying to, raise money. So therefore, this was acting as a hindrance, and therefore they have kind of removed it. But like I said, this is all from my reading of newspaper and hearing media. I mean, I'm not really an investor in any of these angel funds myself, so I really don't have too much of a view out there.
Harish, there are a couple of questions on impact on gold ETF, gold fund, which I am presuming is more a view-based sort of, interpretation that somebody would like to know. Do you have anything that you would, and also impact on arbitrage fund?
Arbitrage, yeah, there are quite a few questions on the impact on arbitrage.
So, from a STT increase, obviously there is a certain amount of cost increase, but our assessment after speaking to the fund managers is that it's not going to meaningfully impact net returns to the investor. At the end of the day, more churn you do, the better the prospects of arbitrage returns. So in some sense, this kind of acts as a lesser incentive to churn, and therefore the spread should go up in some sense. So arbitrage is like an equilibrium kind of a thing, right? So higher the churn, lower the spread. Lower the churn, higher the spread. So somewhere markets will find their equilibrium, and by and large, we don't see a meaningful impact due to these changes from an arbitrage point of view. From a gold point of view, of course, overall broader view continues to remain the same as before, which is that it does form an important asset class from a financial asset point of view. Obviously, Indians as a household are significantly overexposed to gold. But for those planners which want to bring in the benefit of a lesser correlated asset class like gold, it makes a lot of sense. So we do think that it makes sense to have gold as an exposure, including in our funds like the multi-asset allocation, where we have a reasonable amount of exposure to gold and silver. So I think we continue to maintain that overall view. Of course, whatever change in the fall in price will get reflected on the ETFs. There is no way in which that is not going to get reflected. So a reduction in duties will impact the end gold price, right? And that will also flow through in terms of what the end NAV value for these units, as far as the products are concerned. Ultimately the underlying, if there is a change, it'll get reflected here. But barring that, we continue to maintain a positive view out there.
Sure. There is a question that now that the defense and railway sectors are expensive, essentially from a valuations perspective, do you think these are still good sectors to invest in?
So, I mean, the basic premise is that these are good businesses. Good businesses need not be good investments if bought at extremely elevated valuations. I'm not saying every company is at that thing. There is going to be some nuance, which is there. We think that, especially if I were to think of, say, defense, price to book valuations of 16, 17 times, are extremely high. Just to put it in context, the consumption index, which typically tends to enjoy very high price to book, very high asset turns because their fixed assets are very, very low, is trading at about 8, 9 times price to book. So just to kind of give a sense as to how much, quote unquote, rich the valuations are for sectors like defense. Yes, I mean, the near-term prospects and the resolve of the government in terms of Atmanirbharta, the fact that we want to spend more on railways, I think all of that will continue without a doubt, and they will grow their companies' earnings meaningfully over the course of the next 3-5 years. The only hindrance is how much of that 3-5 years is already captured in the price. For someone to make a delta on top of what they would otherwise give is where we think that they continue to be reasonably on the expensive side. at a particular level, once the froth kind of dies off, there is a reasonable time correction. I think, these stocks will again be very, very attractive because the near-term visibility for many of these companies is extremely good. I mean, order book to revenues are like 10 times. So you've got almost 10-year visibility of revenues that are coming through in certain cases. So therefore, which are very good trades. It's only about, क्या भाव पे आपको लेना है. At this point of time, we think that, the margin of safety is low. And so, that is broadly our view.
Sure. Similarly, maybe you can throw some light on infrastructure sector and our fund in particular, given the budget announcements.
So broadly, I think overall we continue to maintain a positive slant towards investment. कि broadly अगर 4 themes है, financials, investment, exports, and consumption. We continue to be positive on investment as a theme, wherein we think that, overall, जैसे कि obviously government spending is already in 4th gear. Broadly, 4 components of spending है, 4 engines of spending. Okay, एक है सरकार, both central as well as state governments capex. Second is private sector. Third is real estate, and चौथा है PPP. Public-private participation. In our view, when all the 4 engines fire is when we start to get really worried about this theme as a whole. आज के दिन में अगर आप देखोगे तो the first engine, which is that of government spending, is definitely in 4th gear. It has been in the 4th gear for the last 2 years running. So while they have continued to further grow, I don't think, we should expect miracles from more spending as far as the government is concerned. Clearly, from a private sector is where we are seeing that delta. जैसे कि मैं बता रहा था कि 6 लाख करोड़ का जो capex था listed space में, वो 9 लाख करोड़ है. I would think that, over the course of the next 3-4 years, we'll go from 9 lakh crores spending on an annual basis to maybe 12, 13, 14 lakh crores, because still the profits will then go to 14, going to say 17, 18 lakh crores. So there is still going to be a greater amount of cash flow that they have to redeploy into. So I think we are positive on the private capex cycle. तीसरा है from a real estate point of view. Yes, today's development from a budget, like we said, we have already discussed on real estate, is a kind of a negative development, but maybe it is more negative for the real premium end real estate. On the volume side, which is, cement or pipes or tiles or etc., which are more linked to the volume of construction rather than the price of construction, I think we continue to remain very, very positive on. PPP is still a long way off. So by and large, if we were to look at that construct of the cycle, we still remain reasonably positive on infra as an overall cycle. Yes, returns in the last 12, 18, 24 months have been very strong. Even on 3-year basis, I think the returns are very good. So therefore, you should expect moderation of returns. One should see a reasonable amount of time correction before the next lift off. But we think that, over the medium term, these continue to be reasonably very good themes to back on.
Okay, thanks, Harish. Now, another question that I have is, do you think that SGBs will have a better risk to reward proposition versus equity large cap MF post-tax returns? That's a difficult one.
Sovereign gold bonds against large cap. If, I don't know the horizon, but if the horizon is 3-5 years, I would still say that equities have a far better probability of giving better returns than gold. That's my personal view. Because ultimately, I do think that over the course of the next 6-7 years, earnings can potentially double for large caps. Or for the broader markets also. And, while we may be slightly more fair value plus in terms of that, maybe, that can further extend our doubling horizon. So therefore, at least in terms of equities, we have some way in which we can try and visualize how long-term returns can be. As far as gold is concerned, unfortunately, it is more a driver of the rupee depreciation and what the gold does compared to, say, the larger global currencies, especially the dollar. Right, rupee depreciation by and large is starting to become lesser and lesser. Over the course of the last 5-7 years, the magnitude of depreciation has reduced. So therefore, that can act as a kind of a deterrent. The other thing is, I really don't know. I mean, depending on crisis, etc. Generally, gold does exceedingly well when everything is good. Gold tends to do. The good thing about gold, I would say, is not about one competing with the other, but the fact that gold and equities typically are less correlated, and therefore in a basket they tend to do much better than looking at one against the other. So that, which is why we keep advocating products like multi-asset allocation, which are a basket approach, rather than saying that we are not choosing one over the other. It is that both bring in their positives. More importantly, the correlation between both of them is what elevates the overall risk return for the portfolio. So broadly, this is where it is. You can say a hedged answer, but I would still say that equities pay. I would be more confident over a 5-7 year period than on gold.
Sure. I think we are done with most of the questions, only that somebody wanted you to once again explain how, the time is great for debt mutual funds. And before you start, possibly for the benefit of everyone, we are doing a detailed call with our debt specialist and a CIO Mahesh Patil tomorrow, where possibly we'll come back also on the tax aspect that many of y'all have been posting so many more questions on with bit more clarity. And I know that maybe Harish may not be able to cover all aspects of debt funds. If somebody is asked on liquid fund, how is it beneficial, etc. We really would like to address your question in much more detail tomorrow. And maybe Harish, something that you were mentioning on debt mutual funds, you can just possibly come back to that again.
Sure. So broadly, the view from a debt investor is that debt typically tends to do well when the overall borrowing from the government is on its decline, on a relative decline. I mean, obviously, government will keep expanding, but as a percentage of the overall economy, if it is on its decline, and what the government is spending is not inflationary. This is like a very nice scenario for bonds to perform. I think we are in that scenario jahan pe overall fiscal deficit is on a glide path, which they have continued to commit that they will be on a lower side. And despite the quote unquote setback in the elections, they have continued to use bulk of the RBI dividend primarily to cut down the fiscal deficit. It is not that they have gone about spending that 1,20,000 crore into various other aspects which can potentially increase inflation, right? So they have continued to be in the drive that they want to focus on prudence when it comes to the balance sheet, which is to bring down its overall fiscal deficit. And more importantly, in our opinion, while there has been some benefit given to consumption, primarily in the form of some tax cuts, they have not gone back into subsidies ki paise baat rahe, right? And therefore, we think that, and a lot of these, benefits which are linked to employment, etc., are all, productive linked. It is just not about giving money, for doing nothing, so to speak, which typically means that a lot of the spending need not necessarily be inflationary by nature, right? And therefore, it's a very nice combination to be in. Thirdly, we set out, the government has said that the proportion of the T-bills that they're going to borrow in the first half will be much lesser. It gives them greater flexibility. Ki kuch ho jaye over the course of the next 3-6 months. The government can always, which means that today they are going more for longer duration papers, right? If the yield were to go up, etc., they can very quickly manage their budget and manage their borrowing by borrowing more in terms of T-bill at that point of time, rather than going in for the longer duration paper. So effectively, what it means is that we think that yields potentially got room to come down over a period of time. It is more linked to what the Fed does, clearly, because ultimately it is anchored around that, and therefore we think that there is a greater comfort, and the current budget actually is net bond positive from a market. But I am the equity guy. I think, like Medha said, you will get far more crisper, better articulated thoughts from my colleague Kaustav, Mahesh, and many others in the call tomorrow, which I would strongly encourage you to hear.
Sure. I think, Kamaini, we've covered most of the questions. If I've missed any or you have any questions, please.
No, I think no questions, but yeah, there are a lot of questions pertaining to what is better, equity or debt, or what is whether we will recommend sectoral, thematic. I think one of the only thing I will say and जो मैं बोलना चाहूंगी वो ये सब ना largely investor की appetite, risk appetite, उसके risk profile के ऊपर depend करेगा. Equity, debt, sectoral, thematic, ये सब उन चीजों पे डिपेंड करेगा कि भाई गोल क्या है इन्वेस्टर का और कितना उसका रिस्क टेकिंग एबिलिटी है, उसका क्या टेन्योर है, कितने समय के लिए वो इन्वेस्ट करना चाहता है. ये सब चीजें एक बजट या दूसरे बजट पे कम डिपेंड करके इंडिविजुअल पे ज्यादा डिपेंड करेंगे. दैट इज माय ओनली पॉइंट हियर. एंड yes, I think Medha, we have covered most of it, and a lot of people are asking for the presentation on the budget outlook. I think after tomorrow you will be able to circulate it, right? Okay, good. Thanks a lot, Harish, for your time and for the very sharp clarity and observations. Thank you so much. Thank you everyone for attending this call, and thanks Medha for being such a gracious host. Thank you so
Thank you
much.
so much. Thanks, everyone.
Thank you.